Ladies and gentlemen, good day and welcome to the Action Construction Equipment Limited Q4 FY24 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities Limited. Thank you and over to you, sir.
Yeah, thanks, Ms. Khan. And it's my pleasure to host the management of Action Construction Equipment to discuss the fourth quarter FY24 results. Representing the management, we have Mr. Saurabh Agarwal, Executive Director at Action Construction, Mr. Rajan Luthra, CFO, and Mr. Vyom Agrawal, President at Action Construction. To start off, I'll hand it over to Mr. Agarwal for the opening remarks, post which we'll have the Q&A. Over to you, sir.
Yeah, thank you, Anupam. Yeah, good afternoon and welcome everyone to this earnings conference call for the fourth quarter and the year ended March 24. Along with me in today's earnings con call, we have our CFO, Mr. Rajan Luthra, and our Head of Investor Relations, Mr. Vyom Agrawal. I hope you have had an opportunity to look at the company's financial statements and the earnings presentation, which have been circulated and uploaded at the stock exchanges. This has been yet another year of strong and resilient performance by our company, and we have been able to deliver aspirational return ratios with better quality and consistency in earnings while maintaining a strong balance sheet position. Our ROC and ROE for the last year stands at upwards of 42 and 30% respectively. Let me take you through some of the highlights of this fiscal. To begin with, it gives me immense pleasure to report that we have achieved rupees 2911 crores operational revenues in this fiscal and recorded our highest ever sales, profits and margins in the year gone by. Our growth of 35% is significantly ahead of the market in our core sectors. Our EBITDA margin for the year expanded by 510 basis points to 16.5% from 11.4% last year, and PBT expanded by 470 basis points to 14.9%, and PAT increased by 380 basis points to 11.3%. In absolute terms, EBITDA grew by 94% to 479 crores as against 247 crores in the preceding year. We were able to increase our profit before tax by 97% from 219 crores in FY23 to 433 crores in FY24. Similarly, our PAT also increased from rupees 161 crores to rupees 328 crores, thereby registering a growth of 103% in the last year. To brief you on the financial performance of the fourth quarter of FY24, the standalone operational revenues stood at 836 crores for the quarter, which is up 11% sequentially and grew by 36.4% year-on-year basis. The EBITDA for the quarter stood at 150 crores, whereas the PBT and PAT were at 132 and 98 crores respectively. Our company was able to expand the EBITDA margins to 17.53%, which is an expansion of 131 basis points sequentially and 446 basis points year-on-year. The PBT grew to 15.51%, which is an expansion of 75 basis points sequentially and 377 basis points year-on-year. And the PAT grew to 11.46%, which is an expansion of 308 basis points year-on-year. The strong margin profile was led by capacity utilization, favorable product mix, improved price realizations, along with efficient cost control measures and softening of commodity prices. We continue to be long-term debt-free with sufficient availability of liquidity for the future. Further, the Board of Directors have recommended final dividend of 100%, that is 2 rupees per share for the year ended 31st March 2024. Now moving on to segmental business performance. We have strengthened our role as a market leader in crane industry with our consistent efforts. We have scaled the business to over 21,005 crores in this fiscal. In the last fiscal. Last year, our crane business has registered a strong growth of 37.75%. The growth was both in value and volume terms. Our number of cranes has increased by 37% from 6,584 cranes in FY23 to 8,970 cranes in FY24. In crane segment, we have been able to grow our profit by 76% to rupees 343 crores with a margin expansion to 16.3% versus 12.77% for the last year. Further, we maintained the growth momentum in key segments wherein we have surpassed our projected growth. The segment has clocked a yearly growth of 55% with revenue of approximately 387 crores and increased margin at around 12.84% versus 9.5% on a yearly basis. The material handling segment recorded revenue of 8.6% and stood at rupees 184 crores with margins at 13.2% as compared to 12.33% last year. The agri division registered revenue of around 237 crores, growing by 12%, with a marginal improvement of 75 basis points at EBITDA level. The company has also expanded its global footprint and increased export sales by 72% year-on-year. The contribution of export sales to the overall revenues has increased to 8.5% as compared to 6.7% in the last year. We expect that going forward in the medium term, the export segment will contribute 10% of the overall revenue, which is in line with our long-term target of 15 to 20% contribution. Looking ahead, India is one of the fastest growing economies in the world and its prospects remain very strong for the medium to long term ahead. The infrastructure growth story continues to play a significant role in the economic growth and will have a multiplier effect on the economy. Our strategic positioning in core sectors of infrastructure, manufacturing, logistics and agri will provide necessary impetus to our growth trajectory. It is crucial for us to highlight that our organization's revenue is supported by all the other core sectors. Manufacturing and logistics contribute approximately 35% to our revenue, while agriculture and export each account for 8 to 9%. Real estate sector makes up around 10% and institutional sales is about 3%. The construction and infrastructure sector represents the remaining 35%. This balanced revenue distribution is the outcome of our strategic efforts over the past years to steer the company towards counter-cyclical domains. Further, in the last year, the company has expanded its business in the defense sector by securing prestigious orders to supply specially designed forklifts, rough terrain cranes, and truck-mounted cranes for the Indian Armed Forces. Our relentless innovation and commitment towards developing new products empower us to deliver such specialized equipment under the government's Atmanirbhar Bharat and Make in India initiatives. We are confident that going forward, this dynamic line of activity will contribute in excess of 5% to our revenue in the medium to long term. It will not be out of place to mention that we are expecting some of our biggest orders so far from the Indian Defence Forces over the next few months. In the past year, we have successfully completed our capital expenditure as planned, and our crane division's capacity has increased by 46% from 9,000 units to 13,200 units annually of different types of cranes. While the metal handling segment's capacity has grown by 50% from 1,800 units to 2,700 units annually. This expansion underscores our commitment to strengthening our core business. Looking ahead, within the current year, we plan to further enhance our operational capabilities with modernization and automation aimed at boosting our capabilities and market competitiveness. In line with our focus on product improvement, we are upgrading our offerings to meet the revised CEV 5 emission norms, which will be effective from January of 2025. This transition is not only about compliance but also about elevating the overall performance and eco-friendliness of our products. Our proactive approach and relentless focus on quality and reliability enhancement will facilitate to position us well in the export markets for sustained growth and long-term success. Going forward, in the first few months of FY25, we expect muted growth due to ongoing general elections in the country, followed by monsoon season. However, on a whole year basis, we are optimistic and expect a growth of at least 15-20% in our cranes, metal handling, and agri portfolios. For the construction equipment segment, we are looking at growth rates of 30 to 40% on an increased base. On the whole, we are looking at a 15 to 20% growth in our top line for FY25, with further possibility of margin expansion. We hope we are in a position to revise these projections by the end of second quarter. which will predominantly depend on the results of the general elections, policy continuity, and the onset and intensity of the monsoons. Furthermore, we remain highly optimistic about the medium to long-term prospects of our company and are committed to deliver our growth agenda. We will continue to aggressively pursue cost savings and implement strategic pricing actions, ensuring that we both protect and expand our markets. We believe that our foundational strategies are firmly in place, setting us on a path of sustainable growth across all our operational segments. This approach will lead to expansion in our top line, bottom line, and overall margin profile, driving value for our investors as well as stakeholders. Thank you. And now I would like to open the call for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for the moment while the question queue assembles. The first question is from the line of Garvit Goyal from Nvest Analysis Advisors. Please go ahead.
Hello.
Yeah, hi.
Am I audible, sir?
Yeah, you are audible.
Good evening, sir. Congrats for a good set of numbers.
Hi.
Sir, basically you have reduced our guidance for FY25 due to some external factors. But the factors that you have mentioned may result in deferment of demand for few months, but it should accordingly end up with higher demand in second half, considering the positive demand from the end industry, which you also mentioned in last quarter con call. So considering this, why are we giving a very conservative guidance of 15 to 20% for FY25?
If you notice, we generally give a conservative guideline because, for our base to be very clear with respect to what is achievable easily and what can be achieved. So that is why, going by our trend, we are saying 15 to 20%, and I believe we should be able to exceed it. Primarily for the reason that hopefully the current government will continue again. So all the focus and impetus on the growth of the country will continue. And secondly, from 1st of January 2025, BS5 norms for construction equipment, they are called CEV5. So CEV5 CMVR norms will be applicable. So we expect that in end of quarter 2 and especially quarter 3 will be a lot of pre-buying for machines which are moving straight from BS3 to BS5. Currently we have two types of machines, one which are already in BS4 regime and about 40% of the company's machines which are in BS3 regime. So all of this is going to BS5 and there is going to be a substantial price increase, especially from BS3 to BS5. So the numbers will be a lot of pre-buying. So we are very hopeful. It will definitely be better than that. But on the safer side, I think middle end of second quarter is the best time to project the more easily possible growth trajectory.
Understood, sir. And sir, previously you mentioned the upcoming launch of some new products like electric crane and aerial work platform. So where the company anticipates gaining a first mover advantage in India. So could you please provide an update on the status of these product launches?
Yeah, the electric crane has been ready with us. Unfortunately, the government regulation, the Gazette, wherein the regulations would have been formulated for the registration of these vehicles with Indian RTOs, it got delayed and now it will happen only after elections. We have been trying to meet and I've also met the Ministry of Road Transport Highways quite a number of times on this. So we are very hopeful that this will go through in June now. So hopefully we will be able to start to sell our electric cranes by July onwards, which have been ready with us for quite some time now. Aerial work platforms, more or less everything is in place and the product has been productionized. So we expect to start delivering this product. Earlier we were planning to do it beginning of March, but due to some supply chain constraints. But now I think this will start to happen in the month of June with respect to deliveries of our new product, aerial work platform. And in the same breath, I would like to say that we are also working on a new model of next generation crane, which we believe can be a game changer. So that we are already working on, and within this current financial year we expect to introduce that. Apart from a reach stacker, which is a much bigger version of a forklift, you can say in a way, capacity of 40-45 tons for container handling. And we are also working on a special model of backhoe loaders. As a matter of fact, it is currently under endurance testing, and we expect to launch it sometime in July, August. So this is a very special backhoe loader, equal wheel, all wheel steering, which is popular outside the country, and we have specially designed it for the export market. It has no market in India. Similarly, we are very hopeful that in July, August, we'll be able to launch a new telehandler, which has been designed again specially for the export market. It has no market in India. It is again equal wheel and all-wheel steering and all-wheel drive.
Following up this discussion, basically last quarter you mentioned, I think, a product, a crane that is currently getting imported from China, and we were expected to launch that product in 2 to 3 months. So what is the status of that?
See, those products up to 75 tons capacity, 80 tons capacity, we have been manufacturing for last 10 years. It is just that in the last 4 or 5 years when the market has increased, the Chinese were able to, sell more than us because of their very aggressive pricing. So herein we were expanding our capacity from 4, 5, 6 units a month, or let's say 50, 60 units in a year, to 400 units. It has already happened, and our capacity is in place now. So this year we will see increased results. So we will be able to, if not triple, at least double our sales in these bigger cranes within the current year. That is what we believe. So we should, from a figure of approximately around 40, 50 units, I think we will cross a figure of 100 units, can be much more for this year.
Understood, sir. And just last question on our margin. So you mentioned last quarter, like margin sustainability basically depends upon how the commodity prices will prevail. So looking at the current scenario where commodity prices are rising, so can you help me to understand how do you think EBITDA margins to shape up in FY25 from current levels of 14%?
See, obviously, if the commodity prices are increasing, if they are within range, 2, 3, 5%, 7% up down, that is easily manageable. But obviously, like in the year FY22 or FY23, the Ukraine war or just before that, then it was mayhem. So those types of scenarios are difficult to immediately manage. But generally, we are able to pass on any commodity increase with a lag of 2, 3 months to our customers. In any case, we take an annual price increase. So looking at all that and all the actions that we take to control our pricing, our selling prices, I think the 16% plus scenario is hopefully here to stay. And with our revenue further increasing in this year, there is only scope of further improving our margins.
Understood, sir. Thank you very much, sir, and all the best for the future.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. The next question is from the line of Jaspreet Walia from Clockvine. Please go ahead.
Hello. Sir, can you hear me?
Yeah, we can hear you, yes.
Sir, thanks for taking my question. So in the last couple of calls, you have been mentioning of the changes you're doing in the material handling business. So if you could just, tell us of, what changes have been done and what do you think would be the impact of those changes in the coming years? Would you be able to drive higher growth in this business in the coming 2-3 years?
Yeah, we are very sure that the rate of growth in the material handling segment, which is about 180-190 crore for us, will be faster than what it has been in the last 1 or 2 years. And primarily it was inefficiencies within the system of the company. And, we worked all across within the segment with respect to our plant manufacturing and upgradation. And now things are online with respect to, I would say, the quantity of production as well as, further improved quality and performance of the machine. And going forward, from 1st of January onwards with the new BS5 regime, we also plan to introduce a totally new range of metal handling machines, especially forklifts, which will be, even better upgraded to meet international level of, performance as well as styling. So that is also in the pipeline to happen in January next year. So everything is on track, and we are very hopeful that this year we will grow faster than what we've been doing. It has been growing, but at a slower pace. So hopefully we might even achieve 20% growth this year in that sense.
Got it, sir. So as of now, what part of the forklift market in India are you able to address? And the products that you are going to introduce going forward, would they increase the addressable market size?
See, currently we are doing forklifts up to 12 ton capacity, which we are manufacturing in India. And obviously, let's say there is also a niche market, about 20-25% of the market, which is addressed by, forklifts imported into India from premium brands, like Toyota or even Hyundai or Yugendro. So it will also give us access to, the premium segments that are upgraded machines. And our intention is to sell the upgraded machine not only in the premium segment, but even in the regular segment to change the market.
Got it, sir. Got it. So in the last call, you mentioned that you're talking to a big brand for manufacturing a particular product in India for the Indian market as well as for the world. So what is the status of that initiative, sir?
It is in very advanced stages. More or less everything is through. It is just that we have an NDA, so we really can't disclose. There is some further, I would say a technical. It's not really a technical problem, but it's something in the interest of the joint venture that we'll be delaying this the formation of the joint venture or the announcement by maybe another 2-3 quarters, which I really can't disclose to you. But it is in the interest of the joint venture and the overall, let's say, sustenance and profitability of the venture.
Got it. So you also alluded to making some large announcement in the crane market, which would have implication on your business in cranes. So has there been any progress on that front?
See, cranes, we are leaders. Pick and carry cranes, tower cranes, and now trying to become big in the bigger segment cranes, that is 60-70 tons and bigger, where the Chinese have taken over the market in India, and we have expanded our capacity. So that is the only news in cranes. But yes, in saying this, definitely some big things are lined up in defense sector. Because last year, about 2.5% of our revenue came from defense at about approximately 68 crores. And in the opening of this year, we had pending orders worth about 65 crores. So, and over the next 2-3 months, we are expecting some really big orders from the defense, which I also mentioned in my opening address. So they could be variable in the tune of 400 to 700 crores, maybe slightly more. So maybe this year can be the game-changing year for us with respect to contribution of defense with respect to our company.
So I think you were referring to some acquisition in the crane segment.
Referring to what?
Some acquisition opportunity in the crane segment.
Yes. Things are going on. They are in liquid state. As soon as they solidify, something is up. Obviously, we are a listed company, so it will be informed. But
outside India or in India?
We are actually open for inorganic growth in the country and outside country also. We have a couple of targets in mind within the country, and also it is work in progress. And outside the country, we want to acquire a smaller company with a good product, which we have in mind. I can't say any more than that. We have already located some companies, and so that they can help us springboard faster into the export markets, so that we can start doing white labeling for our own company outside India, and also move some of the specific export products to that company, apart from their own products which they manufacture in that country.
Got it, sir. Thank you. That's all from my side.
Thank you. The next question is from the line of Ankur Jain from Future Investment Private Limited. Please go ahead. Yes, Mr. Ankur, go with the question, please.
Can you hear me?
No, we can't hear you. Hello?
I think we can go to the next question. Maybe you can come back and discuss.
Okay. The next question is from the line of Aman Soni from Invest Analytics Advisors. Please go ahead.
Hello, am I audible?
Yeah, you're audible.
Sir, we were supposed to get some crane license for export. So, what is the update on that?
You're talking about some crane license for export.
Yes, sir.
So I don't think there's any such requirement. In India, we follow BIS standards, and obviously the countries wherein we are exporting to, we make sure that they are meeting the regulations of that country. But there is no requirement of any specific export license.
Particularly about the newer crane products that we are targeting into the export market. So, are we not in any requirement to getting the export license for those products that we are looking for?
There is no need of any export license apart from maybe some export benefits that we get. If you're talking about those licenses, then obviously, Luthra, what are the different? We get some benefit on exporting, right? 1 or 2%.
Sir, but I don't think there is any requirement of any license for exporting. This is a freely exportable product. As regards export incentives, definitely these all products are covered in that export incentive. So once we start exporting, we get the export benefit automatically. So there is no requirement for any export.
There is no requirement as such for any export license from the country. And we take adequate care, whichever country we are supplying the machines to, whether cranes or any other machine, to make sure that we meet their homologation requirements. And as a matter of fact, we over the last 3-4 years, we've evolved special left-hand drive cranes also for some of the Middle East and African markets.
Understood, sir. That's it from my side. Thank you.
Yeah.
Thank you. A reminder to all participants, you may press star and 1 to ask question. I repeat, you may press star and 1 to ask question. The next question is from the line of Garvit Goyal from Invest Analytics Advisors. Please go ahead.
My question is answered. Thank you very much.
Okay, thank you. The next question is from the line of Rajiv M. from Raj Investments. Please go ahead.
Good afternoon, everyone.
Yeah, good afternoon.
Yeah, first of all, I would like to congratulate on a very good set of results. I have a couple of questions. First question is, I see a rise in interest expenditure. So, any specific reason for that if we compare it with the previous quarter or the YOY comparison?
I think primarily it is more to do with the interest rates being higher in the last year, but I think Mr. Luthra will be a better person to take that question.
Yes, there are two reasons for increasing interest expenditure. One is the increase in the average cost of borrowing, because you must be aware that RBI has been increasing the rates steadily for last 1.5 years. That is one factor. Second thing, we have gone aggressively on discounting of supporting our vendors, especially MSME vendors, and which payment terms have been brought in faster. Not at free of cost, but definitely we are getting discounts on the payment. So we are leveraging the alpha between the cost and the discount for that. So that is why the interest cost is slightly higher.
So would this be a one-off effect in this quarter, or going ahead it will come in the same range of 8 to 10 crores?
It will be in the similar range because the practice is still continuing, and we are trying to further leverage our financial strength to get more discount from a vendor by giving them advance payments and supporting them to maintain a supply chain issues.
Okay, so we are benefiting in terms of the discounts and all.
Yeah, that's right.
Okay. Another thing is, Mr. Agarwal, you had mentioned about this that election effect. So I would like to know if we compare the month of April and May, so has it been materially impacted in terms of the work because of the election, or how is it lying going forward means for the first 2 months?
Generally what happens, first 2 months have definitely been slightly muted as compared to the momentum that was there till March. And what we've also noticed in the past is during the election month, those 2-3 months, the market, let's say the buyers, even if they have requirement of work, they just go on to wait and watch mode, parts of the market. So that is what we are experiencing. I'm sure post-June onwards, things should come back to normalcy.
Okay. So the impact will be for the first 2 months, and then maybe the demand would again come back for those who have built it up.
Because there is no material change as such which has happened. And we are also very confident that on a year-on-year basis, we should be doing reasonably well, even in the current quarter.
And the final question is, any update on the Ghana part, which was stuck up, I think, because of some funding from the World Bank or something? So any update on that?
Yes, Ghana has not gotten through so far. We were very hopeful. That was the commitment which we were getting from government of Ghana. Current situation is that there has been some default from government of Ghana with respect to certain credit lines given by Exim Bank, and this project was supposed to be funded by Exim Bank. So that default or the dispute between government of Ghana and Exim Bank has not been resolved, and Ghana is about to get some IMF relief package on the basis of which they are going to fulfill their requirements to Exim Bank. So, right now it is in a status quo type of scenario that even we do not know whether it will happen in 1 month or 1 quarter or 2 quarters. But the order on us very much stands. And but we are not getting any clarity that when it will get solved within this quarter, next quarter. So that is the current situation.
But then the pipeline, but it's stuck up as of now.
As of now, it is stuck up. But one thing which I can tell you is that because obviously we do not want to go ahead or do anything without our payments being secure. So that will be very foolish, because this line of credit, our security was coming from Exim Bank for all our payments. Although we have signed agreements with Exim Bank, but the disbursements are not happening because of the default of government of Ghana. So, everything has gone into a limbo as of now. So maybe in the next 1 or 2 quarters, this thing improve, or as soon as their IMF thing goes through, something will happen. But yes, on the brighter side, whenever, let's say over the next 3 months, 6 months, which we are not in a position to answer now, but whenever this happens, we will stand at a slight advantage, because the commodity cycle, the way it was 1 or 2 years back, has turned in our favor. So our initial setting of the plant and supplies, so our margin profile will become even better as and when it happens.
Okay, right. And this year sale was close to 900 crores. So when do you expect to touch the 4-figure mark, in which quarter, on the lighter note? What's your expectation?
My mind would tell me Q3, but we would love it if it happens in Q2, which I don't think it will happen, but
okay.
Q3.
Because of the election effect. Okay.
Yeah, and also monsoons are there, but you never know. Right now the markets are like stock markets. Anything can happen.
But hopefully everything going well, Q3 will be able to touch the 1,000 crores.
I think we should come in close vicinity, or should be in a position to touch. I see no reason why it should not happen.
Okay. That's great. Thank you so much.
Yeah. In any case, first half of our any year is about 45%. Second half is 55%. H1 versus H2.
Yeah.
And the range is 40-45% going up to 60-65%. 40-45% in the first half, 60-65% in the second half. So I'm sure we should be somewhere there in the second half.
But off late we are doing very good even in the monsoon quarter, which was observed last year. So you never know. Keeping fingers.
That's what I said. You never know, because what is happening, what I feel is because of this election quarter, there would be pent-up demand. So you never know that second quarter might also turn out to be, even better than our expectations.
Yeah, because the demand for the April and May may be postponed to the second quarter.
Yes. So, all possibilities are there. But till such time it converts into action, really can't say much.
Well, action is known for action, so hopefully it would happen maybe Q2 or Q3.
Yes. We are also figuring out a way to how at least August onwards things can start improving fast. because this CEV5, BS5 transition. So we will make all the customers aware, by July or August that they are going to have a cost impact of 12 to 15% from January onwards. I'm sure things will look up. We have been managing to do it, so we'll manage to do it again.
Yes, sir. Right. Thank you.
The scenario is supporting us, so I see no reason.
It will. Thank you.
Yeah, okay.
Thank you. A reminder to all participants, you may press star and one to ask question. The next question is from the line of Anupam Gupta from IIFL Securities. Over to you, sir.
Yeah, thank you. So the first question is on the margin front. If we look at this year, the expansion which we have seen is about 310 basis point and the EBITDA level. Almost half has come from gross margin expansion and the half is coming from operating leverage broadly. So within, let's say, if we look at the gross margin part, how much would you attribute to, let's say, better pricing environment because of the strong demand? How much could be, let's say, a better mix between the products since you are gradually upgrading your product portfolio as well? So if you can just give a picture there, and within that as well, how do you see that changing in the next couple of years in terms of, let's say, if it is strong demand, how do you see that changing in the next couple of years in terms of your pricing ability?
I think, Anupam, you've really asked a very hard question, and in that much detail with respect to product mix or with respect to our pricing vis-a-vis operating leverage and obviously commodity pricing. I think to put an exact percentage, I have not seen that data so far, but maybe Vyom or Luthra Sahib, if he has any light on that.
So the major impact has come because of the two factors. One is the volume increase, and the shift towards the higher or new generation cranes and the higher tonnage cranes. That is the one which has contributed.
We can, because of our operating leverage and let's say customers shifting towards product mix, shifting towards higher tonnage, our margins are slightly better. But I'm sure some part exactly I'm not able to quantify right now. We can calculate that and get back to you. Has also come from commodity easing, which definitely happened a little bit in the quarter four.
And definitely there was some advantage of the price also, and which I think was numbers I could quantify.
Like I said, Anupam, I think we don't have an exact answer as of now. We can work on it and get back.
Sure. So that I understand. Number is fine, but let's say in your sense, when you are actually selling the product to the customers, has your pricing power improved, or that is not the right inference one should make?
No, it has definitely improved. We also improved our prices by 2-3% on 1st of January, and the total effect would have started coming in the month of March on the delivery. So pricing power is very much with us. But to be very frank with you, at the EBITDA levels at which we are, our intention in the current year is not to focus mainly on further expanding the margins. I'm sure it will happen automatically with operating leverage. But our focus in the current year is to increase our market share in cranes, which has been stagnant. Last year, primarily due to, because our capacities, additional capacity, especially for pick and carry cranes, only came into play December end.
Yeah.
Now with capacities in hand, I think we are looking more towards numbers than expanding margin, which will happen automatically. The number of cranes increasing, so our fixed costs getting distributed.
Yeah. Understand. That's helpful, sir. Second question is on the future capex which may come in. So you obviously now are well covered for cranes and material handling. I think construction equipment you are reached to about 70% or 75% sort of utilization if I see the numbers right now.
We are at about 55 to 60% in construction equipment right now.
So your capacity is 1500, right? And versus you did 1100 something approximately.
Our capacity is 1800.
Okay.
And but I'm talking of the current utilization. This is not the last year's utilization. If you talk of last year, then obviously I think about 1150. What is the total number of construction equipment we have?
Last year, the total construction equipment numbers were around 1156.
So last year it was close to 63-64%. Currently it is at 55-60%. So what I'll do is I'll quickly, elaborate all the four. In cranes, currently we are working at about 75%. We can produce, let's say, close to about 1,100 cranes in a month of different types put together. Total capacity, annual capacity is 13,200. And we are working on it to take this capacity beyond 18,000. And this will happen within this year, hopefully by Q3.
Okay.
This is work in progress on which we'll be spending about 70-80 crores in this year. Material handling, we can currently do, earlier our capacity was 1,800, which is now 2,700 units, and last year we did about 1,500-1,600 units. So there again we have enough space, for the current year. Construction equipment, our capacity is 1,800 and we did 1,150. So we feel we are comfortable here. And, our plan for construction equipment with, minor capex with respect to our fabrication capacities and assembly capacity, it can easily increase 50% further from here, or maybe slightly more, at a very short notice, 2-3 months.
Okay.
So construction equipment, I feel we are covered, and as and when we feel that we are touching peak capacity, about 150 units per month, we will immediately start to work on expanding this, which is possible in 3 months, as I told you. And in agri, in any case, we are working at less than 50%, we're working about 35-40%. So there is no issue there.
Understand. And all of this is happening at the same 3 locations which you have, right? There's no additional location which you plan to have.
Our one main location is about a 100-acre complex, where most of the activity is happening. And our current revenue capability is about 4,500 crores with all the expanded facilities currently. So, and we did close to 2,911 last year operating revenue. We have capacity to go up to 4,500, which is available to us already. And by the end of Q3, I believe this will be enhanced to close to 5,500 crores of revenue.
Understand. And so just one last question. So obviously exports is a big focus, and you talked about some white labeling which you're wanting to do, and possibly some acquisitions which you want to do to boost your exports. So why? So the question is, why is inorganic required? Why can't it be done in-house with you? So is there any technical requirement or a market reach-related requirement which forces you to do an acquisition, or is there something else?
I'll take this question in 2 ways. First is current white labeling. We are doing for an American company. I think we discussed last time also in our conference call. And also for a Turkish company for backhoe as well as tractors, American company for backhoes. And the second part of your question was
why not do it yourself? Yeah.
See, all said and done, a product going out of, let's say, American or a European continent to South America, South Africa, or Middle East carries a better price and perception. So that is what we want to capitalize on. Our intention is to, spend maybe up to 100-200 crores. We have identified some targets and take over that company. They are already doing a good job in their own products at about 10-12% EBITDA level. So that continues whatever they are doing. Some of the specific export models and products we white label for this company and use the brand name to send out to different parts of the world through their network, which will further be expanded. So we believe that the time to penetrate into different markets with a European or an American brand, a smaller brand, and the possibility of margins being expanded is much more if we use this strategy. And these products, obviously, which we want to white label, most of everything will be produced in India. So, it is Indian cost and selling price becomes European or American, which is much higher in any case. We see a lot of advantages. Apart from that, this particular company will take over. So obviously at component level or even some machine model level, the same can also be done in India and sent there. So the cost itself for this company will reduce, which will either help this company to further increase their margins or, may be able to sell more because of being more competitive.
Understood. That is pretty clear. And just one last question, if I may, sir. On the transition to BS5, the BS5 from January 25. So in all the transition, basically, especially for the engines part of it, in-house you have achieved that level of emission, right? Or is it still pending on how will you source that new engine?
See, we use some in-house engines, but primarily for construction equipment I'm talking. But primarily construction equipment and cranes, I mean, all type of equipment. But we buy engines or use engines right from Simpsons, which is an amalgamation group company, to Kirloskar, to Mahindra, to Cummins, to Tata Motors, Ashok Leyland, Volvo, Eicher, maybe one odd name I missed out. So obviously the engines wherein we use from these manufacturers, because they are already even currently doing up to BS6, so it's not an issue. And our BS5 engine, currently we had upgraded our own engines to BS4, which was more to do with tractors. And it is work in progress as of now. So hopefully by Q3 we should have our own BS5 engines as well.
Okay. Fine. This is helpful, sir. I'm done here. Thank you.
Anupam, I would just be on this side. I would like to answer to your first question wherein you had asked for the breakup of the incremental EBITDA levels of approximately 500 basis points. So, see, we have been saying that with the increased capacity utilization, every 500 odd crores of revenue adds around 75 basis points to our bottom line. Owing to that, 75 to 100. So, owing to that, we can see incremental EBITDA levels of around 125 to 150 basis points because of increased capacity utilizations. Commodity and cost controls results in another 150 odd basis points, and the balance is because of the market price increases and the better product mix that we have been able to deliver to the customers.
Understood. This is helpful. Thank you.
Thank you. The next question is from the line of Mehul Mehta from Nuvama PCG. Please go ahead.
Good evening, team. Thanks for the opportunity. Am I audible?
Yeah. Good evening.
Congrats on great set of numbers. I would like to, can you please update in terms of market share at the end of the year in backhoe loaders? Where do we stand?
Unfortunately, we do not have right now the exact number of machines till March end. But hypothetically putting it, it would be more or less correct. I think it would be somewhere close to somewhere close to 2.6, 2.7%. Have I answered your question, sir? You understood?
Hello, Mr. Mehul.
Right. Can you hear me?
Yeah. I think 2.6 to 2.7%, something like this.
No, 2.6%.
On the upside only.
Okay, right. Okay. And what will be the final question in terms of narrow down of pricing gap compared to our leader market share in backhoe loaders? How would we have narrowed down over the year?
Sir, you'll have to repeat your question. I couldn't figure out what you're trying to ask.
To our leader in loaders, how would we have narrowed price gap? How would we have over the year?
But see, there's a reasonable price gap between the market leader and us. And we have currently no intention of narrowing the price gap because we want to increase our numbers. And that is a model we have been following for last 1 year because at the current price because about 80% of the backhoe loaders are sold in the retail segment or the hiring segment, which run it on a monthly or a yearly basis. So at the prices of our, let's say the main market leaders, prices at which they are selling, So the viability of a rental company or a small hirer is becoming very difficult in current stage. Whereas at our pricing level, there is a viability to the product on running it on rental on a monthly or yearly basis. So I think currently we are comfortable with our pricing. Last year we were also able to expand our margin to more than 12% in the backhoe loader segment. And going forward with further increase in numbers, I'm sure this will expand further. So I think we are comfortably placed as of now, and we are not trying to narrow down the margin as of now.
Hello.
Yeah.
Yeah, sorry for this. I'm done. Thank you. Thanks for your explanation. Thank you.
Okay. Yeah. Welcome.
Thank you. The next question is from the line of Zubeen from Ambit Investment Advisors. Please go ahead.
Hi, sir. So you've spoken about all the segments. If you could just speak about the agriculture side, so basically the agri equipment side for FY25, how do you see this segment going through? And also, if you could break it down in terms of tractors separate and for farm equipment separate, in terms of the harvester side separate. So, what is the outlook for FY25 if I ask from your point of view?
We are again looking at 15 to 20% growth on revenue basis. And last year again we had planned for that and we were quite confident, but unfortunately it did slow down quite a lot in in quarter 4, March quarter. And we also had some in-house inventory management with respect to our dealers carrying the number of tractors and all that. So on account of that, we did not reach our 15-20% mark, but had to stop at 12% growth. But we are hopeful this year will cover us. And we are also focusing quite a lot here with our bigger horsepower tractor models for the export market. And our recently evolved 20-25 horsepower smaller model, which is very popular, outside India for smaller applications and orchard applications. So I think we are hopeful that we will do a 15-20%. Obviously, we would love to do a faster than that, but somehow we've not been able to do it. So I really don't want to commit or say anything. And with respect to the second part of the question was with respect to harvester and.
Yes, sir. So I just wanted to know, one, if we could provide the breakup in terms of the total, you've given the total volumes, but for harvester separately, if I could get the volumes. And what is the sense with respect to, the farm mechanization? Are we seeing farm mechanization taking place or is it slow? So what is the outlook going forward?
I think the mechanization part is definitely happening and happening at a good speed. And that is happening not only in farm, all across, to be very frank with you. And for the breakup part of it, I think, Vyom, you can answer. And also one more thing that I'd like to inform that we were doing small implement thing, rotavators, which we have discontinued in the middle of the year because we realized that that was really not much revenue accretive or, it was more of a burden than this thing. So we discontinued the rotavator part. I think, Vyom, you can elaborate it.
Yeah. So tractor numbers for the last financial year stands at around 2462 and harvesters is 137. Now the balance numbers was a little bit of rotavators that we did in the last year in the first half. But as already explained, because of the low ticket and low profit nature of that business, in principally the management decided that, we would like to come out of the small ticket implements business and focus more on the larger tractors and the smaller garden tractors of 20 to 25 horsepower. So this was the breakup here.
Right, sir. And if I could just add, so apart from harvesters, as you spoke about rotavators, you exited. Do you all plan to introduce any further products in this farm mechanization space, since you said that this is a segment which is seeing good traction?
Yes. So definitely we had one big harvester, which was a HET60 model. And then we have now started developing ultra lightweight combines because, in the paddy fields, these lightweight combines are gaining more popularity in the Indian market as well. And we see that there is a market gap which can be fulfilled by us. So now we have 3 models in harvester. One is the normal harvester. Then we have ultra and then we have Ultra Plus combines. So we are now going into the lightweight category of the harvesters.
Great.
And we
Thank you
just
so much.
started to deliver the same, right, sir?
Yes, sir.
We started delivering.
Right, sir. Thank you so much, sir.
Thank you. The next question is from the line of Surit Deora from Paladin Capital. Please go ahead.
Hi, sir. Congrats on continuous strong performance. I had a question regarding calendar year 25 with this transition to BS5. So 2 points. One is that I would imagine that there will be a lot of pre-buying, and you also talked about Q2, Q3 being strong because of this pre-buying. So in effect, you are basically pulling forward demand from next year as a result of this. So is it not fair to expect that the volume next year will generally be not as exciting in terms of growth?
I don't think so. It never happens like that. We've seen a lot of pre-buying. But that is, that will be in 40% of the number of equipment we do. The balance 60%, we don't expect any much pre-buying because transition from BS4 to BS5, the price gap would be maybe 2 to 5%. It will be more in the 40% segment, and especially I would say there in the 3-ton or smaller forklift category and, the pick and carry cranes, the Hydra type. So I don't foresee that.
You're saying 40% of your products will not be affected?
Yeah, because another thing is, because I'm sure we will be short on deliveries in Q3 because as it is, the demand scenario starts to increase September and onwards. So it will be coupled with this pre-buying. So maybe there will be a lot of order booking, a lot of things happening, whatever best we can deliver will be happening. But post that also, genuine requirements are not delayed or it is just that something will get preponed. I don't think it will affect us.
So you said BS4 to BS5, the price difference is 2 to 3%, which is 40% of your product portfolio.
2 to 5%.
2 to 5%. And 60% of your product portfolio is BS3 to BS5.
No, it's the other way around. 60% is 2 to 5%, and 40% will be 12 to 15%, where we can expect a lot of pre-buying.
Okay. 12 to 15%. Okay, fine. Got it. And the other question was, you were mentioning in the last quarter's call about a potential tie-up with a foreign company for white labeling or some sort of partnership in India. Is there any update on that you would like to share?
It is also work in progress, and things are going in the right direction. But we have already, in the meantime, in the last, I think 2-3 quarters, we have started white labeling, like I mentioned earlier also, for one American company and one Turkish company. That has already initiated in the last 2 quarters. And there are some more opportunities, even bigger than these ones, which are under currently under negotiation.
So the white labeling is you manufacture and you export under their brands. Is there any other, are you exploring other partnerships for the Indian market also?
Yes, there is. Today everybody wants to come to India. And, if they're not selling in India, or even if they are selling, they still want to partner with somebody to be able to produce it at the right cost and the right quality to take it out of India. And if you practically look around in our space, whichever Indian companies were there have in the last 10-15 years been taken over by foreign brands or multinationals. Even Tata Hitachi is now more Hitachi than Tata, or L&T Komatsu is more Komatsu than L&T, or Erex or JCB long back has taken over Scott's equity, or L&T Case now becoming totally Case Construction, plus. So any small big company outside India, if they are looking for development of the product or white labeling any one of our existing products, if they come to India, perhaps we are one of the only options. So a lot of things are happening on multiple fronts, and I'm sure they'll keep on adding value to our export portfolio.
Great. Thank you so much. All the best.
Thank you. The next question is from the line of Devijay Patel from Fintus Capital. Please go ahead.
Yes. Hi, sir. Congratulations on a great set of numbers.
Yeah, thank you.
So I just wanted to, understand, since we are foraying into defense as well. So
can you make it louder, please?
Yeah. Can you hear me now?
Yeah.
Yeah. So I was saying, as we are foraying into defense as well, so can you shed some light on what orders we are expecting and how much we expect it to contribute to the top line?
For the defense business, right?
Yes, just for the defense business for FY25.
Yes. See, I'll start with last year. Last year we executed business worth approximately 68 crores, which is approximately 2.5% of our total revenue. But this year we started with orders and order backlog of 65 crores. So definitely our defense business is going to be much more than what we did last year. So yeah. I think it will easily, we started with 65 crores, it will easily cross 800 crores, maybe more. But simultaneously, there is some certain specific requirements or bids which were being pursued in the last 1 to 2 years. So we are expecting 2-3 very big orders, one of them being our biggest ever from defense. And these combined orders can be to the tune of 400 to 700 crores. So we expect to receive these orders over the next maybe 2 months, 3 months max, maybe even earlier than that. So that could change the contribution of defense drastically. We were targeting 5%, so we will easily exceed that hopefully in this year if these orders go through firstly. And then our pipeline for future is tight because again these big orders are again deficit type of purchasing.
Mm-hmm.
So out of this 400 crores, 400 to 700 crores all of it will not be executed in this year. So maybe about a 50 to 100 crores we might be able to catch in this year and the balance will trickle down to next year. But still already 65 crores in hand. Another 30, 40, 50 crores will come, and let's say these bigger orders we are able to execute 50, 100 crores. So we can actually do 100 to 200 crores worth of defense business in this year. If I just calculate the percentage, it might go beyond 5% in this year. As revenue contribution.
Yeah. So I was asking this because, for example, let's say we conservatively, figure out that monsoon might not be that great for us. So do you think defense might, carry our order book during those crucial months?
Your voice is actually a little less and I could not figure out monsoon and what else.
Yeah, so I was saying, let's say we are being conservative and the monsoon is muted for us. The monsoon months, they're muted. So do you expect defense to carry our order book for those months?
Because if we get these orders over the next 2 months, to start execution for one of the orders can start, yes, it can play a role in quarter 3. If you get it in the next 1 or 2 months, one of the orders. But the other order will require us at least 3 months of preparation before we can start execution because of certain components and different components with respect to supply chain. But I don't expect the quarter two to be muted even with or without defense. Because I believe that there will be enough pent-up demand from quarter 1. So I don't expect quarter 2 to be muted. That's my gut feel. Rather I see 4 June onwards, things will go back to track.
Great, sir. All the best for you. Thank you.
Yeah, thank you.
Thank you. Ladies and gentlemen, due to the time constraint, we will take this as the last question for the day. I now hand the conference over to the management for closing comments. Over to you, sir.
Yeah, thank you. I think last year was one of our best years with respect to our largest maximum revenue, record profits, and even with respect to margin profile. We've been able to do a good job. And going forward, we'll be working very hard to maintain and obviously also focus on increasing our market share as well as margin profile in the right mix to be able to further increase our revenue and maintain our growth profile. And we are currently further working on adding new products like we discussed during our meeting, like reach trackers and after NPN we've introduced some special models for export market for backhoe and telehandlers. So we'll not only be adding new products, we will also be adding new geographies internationally within the current year, so that our export drive into larger number of countries continues. And we are hopeful that we will be able to double our revenue over the next 3 years, and we'll be targeting that. And in saying this, I would also like to say that we are also targeting a 3x over 5 years. So from the current level going up to a 3x level over the next 5 years is what we're targeting at. And hopefully the election results will be positive for the country and the growth momentum will continue. Thank you.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you, everybody.
Thank you.